Are the headlines about the real estate market misleading you? Hey, my name is Adam Nadler. I'm the owner of Vision Real Estate. Thanks so much for tuning in yet again. I'm just gonna run through this really quickly so we can get to the good stuff. Please don't forget to like and subscribe if you really enjoy this content. And also don't forget to book a time with me if you have any questions using the link in the description below, which will connect you right to my calendar, and you can just book a quick 15-minute chat with me at your convenience, or feel free to just email me any question that you have to adam@visionrealestate.ca. So I wanted to make this video today because the headlines are just going berserk with the July stats that just came out. Now, I'm not going to sugarcoat this. There are some numbers in here that are definitely bad. There is no way to make them good. But there are some numbers in here that, without context, make for really great headlines. But when you actually dive deep into the numbers with some context, they actually paint a bit of a different story. So let's jump right in. The main number that everyone is talking about right now is sales volume, which is down a whopping 47% year over year. Now we're gonna come back to this number later, so don't forget that number, but I do wanna provide some context to it. Sales and price are correlated, but they do not have a causational effect. Now, what do I mean by that? Correlation does not equal causation. So when I say that sales volume and price are correlative, it means basically that if sales volume moves up, price will typically follow. If sales volume moves down, price will typically follow. But it doesn't happen in a vacuum. Things like supply, inventory, months of inventory as a stock to flow ratio also really affect that correlative relationship. Basically, what I'm trying to say in a nutshell is when you see numbers like 47% year over year drop in sales volume, don't rush to assume that prices are going to drop by that same percentage. They won't. So touching on sales volume again for a second, I think it's really important to look at the seasonally adjusted numbers for sales volume. If you're just looking at year over year, things are going to look really drastic. And here's why. 2021 had the highest sales volume in Toronto's history ever. So when you really compare that to now, when we see sales volume dropping, the drop is going to feel a lot more pronounced, and we're going to see numbers like 47%. So in a nutshell, this number is not good. And if we even look at month over month, we're down 7% on sales volume. But I guess the context that I want to provide to this number is that things aren't weighted evenly. We have very different asset classes in Toronto and the GTA, which contribute a different amount to those numbers. For the purposes of this video and analysis, let's just broadly categorize things into two categories. We have freehold properties that have no maintenance fees attached to them, and we have condos. Now, condos come in different forms. There are condo townhouses and there are condo apartments. Typically in the downtown core, we have a lot more condos than we do have detached homes. But the further you move away from the core, we start to have a reverse of that distribution. So which asset class is actually contributing more to the drop in sales volume and correlatively into the drops in prices that we're seeing these days? In July, we had a rough number of sales of about 4,900 total for freehold homes, including detached townhouses and semi-detached homes. We had about 3,100 out of that 4,900. And out of condos, including condo apartments and condo townhouses, we had about 1,700. So we know that the numbers are being weighted heavier on the freehold side of the market, and that those numbers are going to be affecting the broad averages a lot more. And out of those numbers, the vast majority of sales that are happening in the freehold market happen between 900,000 to 1.5 million as price ranges go. And for condos, the vast majority of sales are happening between 500 to 800,000. So when we dig deep into the numbers, that's really what our market is made up of mostly, is freehold properties that are selling between 900,000 to 1.5 million and condos that are being sold from $500,000 to $800,000. That's where most of the sales are happening in Toronto. And we are definitely having a much heavier weighting in the freehold market as of this year and last year. Now, if you've watched my videos, I often describe these buyer pools as a pyramid when the market softens and we get demand expanding at the bottom rung of pricing, and a diamond shape where we have an expansion in the middle or the entry-level freehold market within the price ranges that I just previously mentioned when interest rates go down and markets heat up. So to give everything context, those are the two markets that we should really have our eye on to see where things are going and how asset prices are reacting differently in this market versus the market that we had a year ago. Okay, now let's talk about price. Prices are down as an average 2.6% month over month. There is no way to sugarcoat that. That is just simply not good. And when I say that that's not good, I mean for people looking to buy as well, because their actual cost of borrowing has gone up. So again, just to give that statement a little bit of context, what I'm talking about is affordability. Affordability and price are two very different things. Prices can go down and affordability can still get worse, which is what we're seeing right now. The cost of borrowing money or getting a mortgage has gone up more than prices have come down as a relational value between the two numbers. So although prices have come down, affordability has actually gotten worse. Now I'll come back to this in a minute to talk about what would need to happen in order for that to change and see prices come down and affordability get better. But let's talk about average price year over year. As a broad brush stroke, average price year over year is actually up compared to July of 2021, but it's only up by 1.2%. Now remember, these are averages, so they're not being weighted correctly. If we look at condos specifically, average selling price is up 12.2% year over year, which again means that a lot of these numbers, average price, total sales volume, is being really affected by the freehold market and less by condos. All right, so I've been nerding out on numbers enough. What it basically boils down to is how can we get more affordable real estate in Toronto right now, and why does it feel less affordable than it was previously? It all has to do with inventory, or the supply of housing that we have. The supply of housing that we have is actually lower than it was last year, and last year it was extremely low. So although our sales volume has gone down tremendously, we still have really, really few sellers listing their properties for sale out there. And it's no surprise why. If you're a seller right now and you don't have to sell, you really shouldn't. And I know the old saying of never ask a barber if you should get your hair cut or not. I am a realtor. I am still saying if you don't need to sell right now, do not sell. Do not go out on the market right now. Having said that, if you do need to buy something right now, you may want to wait if prices come down and affordability gets better, but interest rates are going up a lot faster than prices are coming down. So you're going to be faced with a very serious conundrum of, do you want to hope that prices will catch up and surpass the interest rate increase as a relational value or not? Because if you bet wrong, which a lot of people so far have, what you're going to end up doing is you're going to end up paying the bank more money that you will never recoup in a higher interest rate, as opposed to paying money into the market, which you will recoup. Even if prices go down, they will recover. You will get that money back. One more thing I do want to talk about right now, because I think that it is important to note, is that rental prices are still booming and going absolutely off the charts. We have a year-over-year increase in rental prices of about 20%. And year-over-year, the total amount of new listings for rent is down about 30%. And I know I made a video about this a couple of weeks ago about when you should buy, when you should sell, what are you doing? Are you upsizing, downsizing? I still really think that if you are an investor, that now is a fantastic time to capitalize on really, really high rental income with suppressed pricing. If you haven't watched that video, take a look at it in my YouTube channel. It's called Should I Move in 2022? And I break down the different types of movers. If you're an upsizer, or if you're a downsizer, or if you're an investor, what should you be doing in this type of market? I threw a lot of numbers at you guys today, and I really hope that I provided some context as to what's actually happening and how these numbers actually break down in a realistic sense. I think that overall right now, when it comes to price and affordability, we will not see affordability get better unless we see a huge influx in inventory. People have to list their homes for sale in order for affordability to get better, because price needs to catch up in dropping as a relation to the cost of borrowing having gone up. But that's just what I think. Let me know what you think. Feel free to leave a comment below. And if you have any questions, feel free to reach out anytime. Thanks for tuning in, and I'll see you next time.